What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on Chinese Internet Data Center Services Provider VNET Group, symbol VNET. And before we get started, I want to show you how I came up with this idea in the first place. I simply went to finviz.com, clicked on the screener button, and then looked for small to mid-sized companies here where it says market cap in the 2 billion to 10 billion market capitalization range. And then I clicked on the change column to see companies or stocks of that size, what was up the most today. And we'll notice that number 3 on the list was VNET. I hovered over the VNET symbol and I'm like, oh, that's a good looking chart right there. It looks like the start of an uptrend. And that was the genesis of the trade setup for today. Now I was curious because not only am I a technical analyst, but I spent several years on Wall Street pouring through financial data and fundamental analysis. And there is a fundamental catalyst for that price movement in VNET today, which is this. NVIDIA said that the US has lifted restrictions on AI chip sales to China. Now that is a positive news for a company, an internet data center service provider like VNET. So that's a positive catalyst. And with that positive catalyst, there were some buyers that were willing to pay as high as $9 a share today, when just last month the stock was trading at 5.5. So we have appreciated over 50% in the course of a little over a month. And because of that, what we're going to be doing today is we're not going to chase current price. Now, price may just continue heading higher. All right, that's been happening in very hot stocks lately. But if you are a disciplined trader or investor and you like to buy your merchandise when it's discounted in price, or you're looking for a pullback for either a quick bounce trade or a lower entry price for a longer term position, that's the trade setup we're going to be doing in today's session. So first of all, we'll notice that we're definitely in a short term to intermediate term uptrend. You can just eyeball it and notice that here. So what we're going to do next is we're going to change the time frame to 1 hour candles, and we're going to look for support levels. All right, there's a support level, one support level right here. So there's a support level in the 810 to 754 price range. And then there's another support level. I'm going to go combine two levels here and call it one support level in the 699 to 641 price range. So two support levels that are about 50 cents wide that you can consider for either a bounce trade if price does pull back to one of those two levels. Now, before we move forward, let's go see if there's technical resistance here in the chart. And this gets kind of interesting because there is a technical resistance level right here that from 885 to 918 that we're currently in. So today price rose and stalled right at that resistance level. So we may continue to encounter further turbulence, or maybe actually even get rejected from that level, or maybe we just continue chew our way right through those sell orders and keep working our way higher. But we're not going to chase this stock in this particular exercise. This exercise is to show how to patiently wait for a pullback. And once again, if it doesn't pull back, nothing lost. Okay, that's happened in several videos, but we've had several videos where we had a nice big pullback that allowed for a much greater reward to risk setup. So what we're going to do here, well, first of all, let's go look for the next major resistance level. There is a minor resistance level in the let's call it the 10 price range. There's another resistance level just below 11, but the next major resistance level for us to consider would be right up here in the 1050 to call it 1150 to 1189 price range. All right. So what we'll do in this situation here, if we're looking for a quick bounce, if we get the chance, would be to place a buy limit right at 810, protective stop just below that level. And what we're going to do is, since price has worked its way about 3/4 of the way through that resistance level, if we do pull back and bounce, we'll assume that price will work its way quickly through that level next and head all the way up to the next major resistance level. So that'll be our target. Kind of an aggressive target since this resistance level has not been broken through yet, but we're going to set up a little more aggressive trade for our target. We can always manage we can manage that trade if we do get filled and the price does start working in our favor. All right. So ideally, that trade would play out something like this. Ideally, you'd get a pullback to the 810 price point or somewhere just below 810, bounce off that level, come back and start chewing through the sell orders in the 885 to 19 price range before heading higher and then going up and testing that major resistance level. Okay, so that trade up right there has about a 5.3 to 1 reward to risk ratio. Okay, so in other words, for every $100 worth of risk you would take in that trade setup, you would have a reward potential of over $500. That's a very favorable reward to risk ratio. Okay, so if you wanted to be even more conservative, I'm not going to spend the time on this particular exercise. You could do the setup and trade at this lower level, but we're not gonna set that trade up today. So let's wrap up the session. Hope you enjoyed it. I'll be back each day this week for more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.